the place where we cut through the noise and talk about crypto the way it really is. Not hype, not fear, just facts, logic, and long-term thinking. If you're someone who wants to understand where this market is actually heading, and not just what the price did today, then you're in the right place. Make sure you stick with me till the end because what we're about to discuss isn't just another crypto headline. It's something that could shape the future of this entire industry. Right now, the Cryptocurrency Clarity Act is officially on the table, and while that sounds like great news on the surface, the reality is much more dramatic. Behind the scenes, there's a serious disagreement happening, and it's not between random players. It's between some of the biggest names in crypto, Ripple, and Coinbase. That alone should tell you this is important. Whenever giants start disagreeing on regulation, it usually means the outcome will impact the whole market, including everyday investors like you and me. In this video, we're breaking down what this clarity bill actually means, why Coinbase is suddenly unhappy, why Ripple is supporting it, and most importantly, whether this bill even has a real chance of passing. A lot of people are emotional about this topic, but here on Bullion IQ, we focus on understanding the bigger picture. Emotion makes you react. Knowledge helps you position yourself ahead of time. Make sure you stay with me till the end because later we'll also be looking at the XRP price chart and a very interesting new way of analyzing the XRP rich list. That data alone might completely change how you think about how early we still are. Many people assume the opportunity is gone. The numbers tell a very different story. Before we go deeper, I want to genuinely thank everyone who supports this channel. Every like, every comment, every subscription actually helps push this content out to more people who are still trying to understand crypto in a confusing environment. If you appreciate calm, logical crypto analysis instead of panic-driven content, hit that like button and subscribe. It really does make a difference. Now, let's jump straight into the drama, because honestly, this is something I didn't fully expect either. When I first saw Coinbase's reaction to the Clarity Bill, I immediately thought Ripple is probably going to see this very differently. And that's exactly what we're seeing play out right now. Coinbase is openly threatening to pull its support for the Crypto Clarity Bill. And that's a big deal because Coinbase has been one of the loudest voices calling for regulation over the last few years. So why the sudden shift? When you strip away the politics and public statements, Coinbase's main issue comes down to one simple thing: stablecoin rewards. Coinbase wants to offer yield on stablecoins. But under this bill, that activity starts to look more like something a bank should be doing. And Coinbase is not a bank. They know it. The regulators know it. And this bill makes that difference very clear. On the other hand, companies like Ripple and Anchorage are already structured to operate more like regulated financial institutions. Ripple isn't afraid of this bill because they've been preparing for regulation for years. They've already been through hell with the SEC. So when Brad Garlinghouse says clarity is better than chaos, that's not just a slogan. That's experience talking. Brad has openly said that this bill isn't perfect, and that's okay. He believes the issues can be resolved through debate and the markup process. That mindset is extremely important. No major financial regulation in history was ever perfect on day one. Waiting for perfection usually means waiting forever, and markets don't wait. This is where I personally align much more with Ripple's position. Killing a clarity bill just because it's not perfect is, in my opinion, completely irrational. The crypto industry has suffered for years because of unclear rules. Companies don't know where they stand. Investors don't know what's legal long-term. Innovation slows down. Clarity, even imperfect clarity, is a massive step forward. We've already seen this logic play out in the Ripple versus SEC case. When Judge Torres ruled that Ripple couldn't sell to institutional investors the same way they did before, many people panicked. But the reality was simple. Ripple adjusted. They found compliant ways to move forward. That's what real companies do. They adapt. The same applies here. Coinbase is calling this a de facto ban on DeFi. Maybe DeFi just has to evolve. Maybe it needs to mature. And if parts of DeFi refuse to comply, they'll either adapt or continue operating outside the system. Either way, innovation doesn't stop. At the core of this disagreement isn't the death of crypto. It's the separation between companies that are ready to operate under stricter regulation and those that prefer flexibility. That doesn't mean the bill is bad for the industry. It might simply mean it's uncomfortable for certain players. And despite all this noise, I still believe this bill passes. Coinbase pulling support alone is not enough to sink it. Overall, this bill is still extremely positive for crypto, especially for assets like XRP that are positioned for regulated financial infrastructure. This is not about personalities, and it's not about who is right or wrong. This is about how the crypto industry is transitioning from a wild, unregulated environment into a structured financial system. That transition is never smooth, and historically, it has always created tension between companies that are prepared for regulation and those that built their business models assuming flexibility would last forever. Brian Armstrong's argument that it would be better to have no bill than this bill is, in my opinion, extremely short-sighted. No clarity keeps crypto stuck in limbo. It keeps large institutions on the sidelines. It keeps banks hesitant. It keeps serious capital waiting. And most importantly, it keeps retail investors exposed to uncertainty. Markets hate uncertainty more than anything else. Even bad rules are often better than no rules because at least businesses know how to operate within them. When Armstrong says this bill is harmful, what he's really saying is that it's harmful to Coinbase's current business model. That doesn't automatically mean it's harmful to crypto as a whole. In fact, it could mean the opposite. Ripple supporting this bill tells you something very important. Ripple has one of the clearest long-term visions in crypto. They are not building for short-term price pumps. They are building infrastructure meant to last decades. If they believe clarity helps them, that should immediately make you pay attention. This is also where people misunderstand regulation. Regulation does not exist to destroy innovation. Regulation exists to decide who gets to participate and under what rules. In every financial revolution, the companies that survive are the ones that align themselves early with how the system is going to work, not how they wish it would work. Ripple has clearly chosen that path. Coinbase is still fighting parts of it. And this is why I don't believe Coinbase pulling support will kill the bill. Lawmakers are not writing legislation to protect one company's revenue streams. They are trying to create a framework that integrates crypto into the existing financial system. Banks, payment networks, governments, and institutions are all watching this process very closely. From that perspective, this bill is still moving in the right direction. Now let's shift gears slightly because this is where things get really interesting for XRP holders. While the market is distracted by drama and headlines, the data underneath tells a much calmer and more bullish story. A new breakdown of the XRP rich list recently circulated, and I think it perfectly highlights just how early most people still are. When you remove dust wallets and focus only on meaningful holders, accounts holding between roughly 1,000 and 500,000 XRP, you end up with around 1.2 million wallets. And that number already assumes something generous, that each wallet belongs to a unique person. In reality, most serious holders have multiple wallets. I personally know many people who do. That means the real number of unique XRP holders is likely much lower. When you compare that number to the global population, you arrive at a shocking conclusion. Roughly 0.01% of humanity owns XRP in any meaningful way. Let that sink in for a moment. We live in a world where billions of people use smartphones, social media, and digital payments, yet almost nobody owns XRP. That alone should tell you how early this market still is. Think about it like this. If you were standing in a room with 7,000 or even 8,000 random people, statistically speaking, not a single one of them would own XRP or even understand what it is. That's not late-stage adoption, that's pre-awareness. That's the phase before mainstream media, before mass education, before institutional FOMO. People often say they wish they bought Amazon or Apple early. What they forget is that early felt uncomfortable, early felt boring, early felt uncertain. Early required patience while the rest of the world ignored what was right in front of them. That's exactly where we are with crypto, and especially with XRP. Many investors struggle not because the opportunity isn't real, but because the market doesn't validate their belief immediately. They understand the technology, they see the use case, but the price doesn't move the way they expect. That disconnect is emotionally difficult, and that's where most people give up. They convince themselves it was just luck for everyone else. But history doesn't support that idea. Markets are full of companies that went up hundreds or even thousands of times in value. Most of them were obvious in hindsight. Apple creating the smartphone was not a complicated concept. Amazon selling books online was not revolutionary at first glance. The key difference was patience. XRP sits in that same category. You don't need secret information. You don't need insider access. You just need time and conviction. Regulation, including the Clarity Bill, is not a threat to that story. It's a confirmation that crypto is being taken seriously enough to be integrated into the financial system. The people who win in these environments are not the ones who jump in all at once at the top. They are the ones who slowly build positions while the narrative is still forming. That's where we are today. The fact that so few people own XRP even now suggests that by the time mass awareness arrives, meaningful accumulation will already be behind us. Most people understand the facts. They understand that regulation is coming. They understand that institutions are watching. They understand that XRP is positioned differently compared to many other cryptocurrencies. Where people struggle is accepting that real wealth building phases are quiet, slow, and often uncomfortable. They don't feel exciting in real time. Right now, the crypto market feels frustrating to a lot of people because price action doesn't match expectations. People thought clarity would instantly send prices higher. They thought lawsuits ending would trigger massive rallies overnight. That's rarely how markets actually work. Markets move when the last seller is exhausted, not when the first good news arrives. Regulation is not a light switch. It's a foundation. This is why I keep coming back to the idea that clarity is more important than perfection. Once rules exist, capital can flow with confidence. Pension funds, banks, payment processors, and governments do not move billions or trillions of dollars into environments where rules are unclear. They wait. And while they wait, retail investors get impatient and leave. That's how opportunities transfer from emotional hands to patient hands. XRP is especially interesting in this phase because it sits at the intersection of regulation, payments, and global finance. Unlike many crypto projects that depend on hype or constant user growth, XRP's value proposition is infrastructure-based. Infrastructure doesn't explode overnight. It slowly embeds itself into systems until one day it becomes unavoidable. Think about how the internet actually grew. The biggest money wasn't made when everyone started talking about websites. It was made when companies quietly built back-end systems, data centers, and payment rails. By the time the public realized how important those layers were, most of the upside was already gone. XRP is playing that same long game. This is also where people misunderstand being early. Being early doesn't mean price immediately goes up. Being early means you're there before the story becomes obvious. It means you're holding something when most people either don't care or don't believe. Once belief becomes widespread, the risk-reward changes completely. Another thing people overlook is how regulation actually filters the market. Many crypto projects will not survive a regulated environment. They were never meant to. They were experiments, not financial infrastructure. When rules tighten, capital concentrates into assets that can comply, scale, and integrate. XRP benefits from that process. It doesn't fight regulation, it aligns with it. This is why I believe the Clarity Act, even with its flaws, is a net positive. It creates winners and losers. That's uncomfortable, but it's necessary. Every mature market has gatekeepers, standards, and compliance requirements. Crypto is simply entering that stage now. For XRP holders, this creates an unusual situation. You're holding an asset that most people don't understand yet, in a market that hasn't fully formed during a time when rules are still being written. That combination doesn't happen often, and it doesn't last forever. What usually happens next is slow normalization. News becomes less dramatic, regulations become boring, institutions quietly integrate, and price slowly reflects adoption rather than speculation. That's when people suddenly say, "I wish I paid attention earlier," but by then, earlier is gone. This is also why comparing XRP to lottery tickets completely misses the point. Lottery tickets depend on randomness. XRP depends on systems, incentives, and global financial needs. Cross-border payments are not going away. Liquidity problems are not going away. The inefficiencies XRP addresses are real and measurable. Yes, patience is required, and yes, patience is rare. Most people are trained to expect fast results. Social media has destroyed long-term thinking, but markets still reward it. They always have. Look at how many people bought great stocks, sold them too early, and then watched them go on to change their lives without them. The mistake wasn't lack of intelligence, it was lack of time horizon. The same pattern repeats in every generation. Right now, the market is giving you time. Time to learn, time to position, time to build conviction. Once clarity is fully in place and mainstream attention arrives, time will be replaced by urgency. Urgency pushes prices up, but it also increases risk. This is why I keep saying that this phase is not about excitement. It's about discipline. It's about understanding what you own and why you own it. If your conviction is based on price, you'll struggle. If it's based on fundamentals and long-term trends, waiting becomes much easier. Meaningful holders of XRP are extremely limited. When you strip out dust wallets and look only at accounts holding between 1,000 and 500,000 XRP, you end up with just 1.2 million accounts. And even that is generous because many people control multiple wallets. This means the actual number of unique individuals is far lower. When you compare that to the global population, only around 0.01% of humanity owns XRP in any significant way. Think about that for a second. 0.01%. This is not late-stage adoption. This is pre-mainstream awareness. Most people don't even know what XRP is yet, let alone understand its role in global financial infrastructure. This reality has huge implications. The fewer people holding XRP meaningfully, the more upside there is once adoption begins in earnest. Look at how the stock market evolved over the last few decades. Early investors in Apple, Amazon, and Microsoft weren't wealthy overnight. They had conviction and patience. They understood the fundamental value of these companies before the broader public did. That's exactly the position we're in with XRP today. We are in the pre-awareness phase where the groundwork is being laid quietly while the mainstream still sleeps. Here's the key. This is not luck. This is a unique market opportunity created by structural timing. Crypto is being integrated into the global financial system, yet few understand the rules, the players, or the technology. XRP is positioned to benefit from that integration more than almost any other asset because it addresses real-world problems like cross-border payments and liquidity. The Clarity Act might seem like a regulatory headache now, but in reality it clears the path for XRP to operate confidently under a formalized framework. Think about it this way. When regulations finally clarify the playing field, capital that has been waiting on the sidelines will flow toward assets that can comply and scale. That's XRP. Assets that are unprepared or fundamentally incompatible with regulatory requirements may struggle or even fail. This is how markets mature. Uncertainty is reduced, risk is quantified, and capital allocates to assets that are robust and compliant. Now, many people panic because they see regulations as restrictions. But if we take a step back and look at history, the opposite is true. Regulations reward the prepared. Ripple has spent years aligning its technology and business model to function within regulated environments. Coinbase, on the other hand, has business lines that don't fit neatly into these new rules, and that's why they're raising concerns. It's not about good or bad, it's about readiness. For retail investors, this means one thing: understanding the fundamentals of what you hold is critical. Owning XRP isn't about short-term price swings or social media hype. It's about understanding that we are in an early-stage adoption phase with a real-world application that will gain legitimacy as the financial system embraces digital assets. This is patience-driven growth, not lottery-style speculation. Another point worth emphasizing is the emotional side of investing. Many people fail not because they lack knowledge, but because they can't handle the discomfort of being early. Being early feels lonely. It feels uncertain. Prices may stagnate or even decline temporarily. But those who have conviction and a long-term perspective are the ones who capture the exponential gains when mainstream adoption arrives. The fact that so few people hold XRP significantly is precisely why those exponential gains are still possible. We can also learn from analogies to historical markets. When early internet companies were growing in the late 1990s, few understood the long-term impact of technology on commerce, payments, or communication. Those who did understand quietly invested and patiently waited while the rest of the market dismissed them. XRP mirrors that scenario. Crypto clarity, regulatory frameworks, and global adoption are the catalysts, but the mindset of patience and informed conviction is the engine. Finally, timing is everything. Each day that mainstream awareness is low is an opportunity to build your position without excessive competition. The Clarity Act, once implemented, will bring confidence and transparency. That's the trigger for the next wave of institutional and retail participation. And the key takeaway here is simple. The market won't wait for you to catch up. The people who act before the mainstream arrives capture the most meaningful gains. In summary, this phase of XRP ownership is about early positioning, patience, and understanding the regulatory environment. We are at a point in the market where clarity is arriving, adoption is early, and meaningful ownership is concentrated. The decisions made in this period, both by large institutions like Ripple and by individual investors, will define the trajectory of XRP for years to come. Staying informed, understanding the fundamentals, and preparing for long-term growth is far more important than reacting to short-term price noise or headline drama, because this is where most people get lost in the noise. The Cryptocurrency Clarity Act, the disagreement between Ripple and Coinbase, the new XRP rich list, and the overall market dynamics are all pieces of a larger puzzle. And when you step back, the pattern is clear. We are in a foundational phase of crypto adoption, and XRP is positioned to benefit disproportionately. First, let's revisit the core idea. Only about 0.01% of humanity owns XRP in a meaningful way. That's not just a statistic. It's a statement about opportunity. This is the early stage of a new financial infrastructure, before mass adoption, before mainstream media attention, before institutional FOMO. Being here now is exactly what separates early movers from latecomers. The time to understand and position yourself is before everyone else realizes the value, not after. Next, the Clarity Act itself is a major catalyst. Regulation often gets a bad reputation in the crypto space, but clarity is the opposite of risk. When rules are ambiguous, capital freezes, projects stumble, and innovation slows. Once a framework exists, even if it's imperfect, businesses can operate with confidence, institutions can allocate capital, and investors can make informed decisions. Ripple understands this. They've endured the SEC battle and know firsthand that regulatory clarity, even with flaws, benefits the long-term health of the industry. Coinbase's resistance is telling, but it's not a market-ending event. Their concerns are specific to their business model. Offering yield on stablecoins without being a bank, that's a very narrow issue, and it doesn't reflect the broader opportunity. In fact, this disagreement highlights something crucial. Not all players in crypto are affected equally by regulation. Some companies like Ripple are built for compliance and long-term sustainability. Others like Coinbase are still adapting. That differentiation is exactly what creates asymmetric opportunities for investors who understand the landscape. Now, let's talk about mindset because this is where most investors fail. Investing in XRP or any early-stage crypto isn't about luck. It's about positioning, patience, and conviction. Most people fail not because the opportunity isn't real, but because they cannot tolerate being early. They expect instant returns, panic during short-term fluctuations, or rely on hype instead of fundamentals. This is why the early-stage data, like the rich list, is so important. It confirms that meaningful ownership is extremely concentrated and that the majority of future participants are still on the sidelines. Here's the truth. XRP's potential is massive because it addresses real-world inefficiencies in cross-border payments and liquidity. Unlike speculative projects that depend on hype cycles, XRP's value is built on infrastructure, regulatory alignment, and scalability. Once the Clarity Act is implemented, institutions will finally have confidence to engage. Liquidity will increase and adoption will accelerate. And as more people enter the market, prices will follow, but only for those who have positioned themselves early. This is also why patience matters more than timing. You don't need to hit the exact bottom to benefit from exponential growth. You need to understand the fundamentals, allocate strategically, and wait. Look at historical examples like Apple, Amazon, and Microsoft. Early investors didn't have perfect timing, but they had conviction and they stayed invested long enough to capture enormous gains. XRP offers the same type of opportunity in the crypto world. Finally, let's address the psychological edge. Being early is lonely, and it can feel uncertain. Mainstream narratives haven't caught up yet. Most people are still skeptical or uninformed. That's exactly what makes this phase so powerful. Those who can separate emotion from logic, who can focus on fundamentals instead of headlines, and who can embrace the discomfort of being early are the ones who will see extraordinary results. By the time the broader market realizes the significance of XRP and regulatory clarity, the foundation for wealth creation will already be built. So, in conclusion, here's what you need to take away from everything we've discussed. The Clarity Act is not a threat, it's a catalyst. The disagreement between Coinbase and Ripple is not a disaster. It's a sign of market evolution. Meaningful XRP ownership is rare, and that rarity is what creates potential upside. Patience, strategic positioning, and understanding the fundamentals are your greatest assets right now. This is a rare moment in crypto history where time and clarity are aligned in favor of early, informed investors. By staying focused, informed, and patient, you are positioning yourself to benefit from the next stage of crypto adoption. The rest of the market will eventually catch up, but those who understand the story now before mainstream awareness hits will have a distinct advantage. This is where the true power of early-stage investing lies, knowing the difference between noise and opportunity and having the conviction to hold through uncertainty. That is why I believe XRP's story is still being written.